The NATO summit comes after a surprising week of election results from France and the UK. So how should investors be thinking about geopolitics, elections, and your money? Joining us now is Ruchir Sharma from Rockefeller International, is also the author of the book, What Went Wrong with Capitalism. Ruchir, thanks for being with us. So let me start with international stocks in general, looking at the all-country world ex-U.S. index. Done pretty well this year, just not compared to the U.S. Given that growth is slowing in the U.S., should investors be looking more at international stocks?
Exactly. I think that the U.S. economy is slowing. This is going to be the second quarter in a row where growth comes in well below 2%. And I think that this trend is now seeming that it's going to go on. I won't be surprised if the U.S. economy comes to a virtual standstill in the next 6 months or so as the stimulus, which has, I think, kept growth artificially high, dries up. And I suspect that's what's going on just now. Whereas in the rest of the world, they were much less reliant on stimulus. And I think that we're seeing that the breadth of the global expansion is increasing out here. So logically, yes, we should be seeing international investing make some sort of a comeback. The issue, of course, is that investors currently are in the grip of the AI mania. So as long as that goes on, everything else gets shaded. So it's very interesting comparison that the US is outperforming, but it's almost all due to the mega cap tech stocks, particularly stocks like NVIDIA. But on an equal weighted basis, if you look at the US market or the European markets or emerging markets, the performance is pretty close. So I think that is just that one sector that's keeping the US outperformance going at this stage.
So I think India is maybe the one major international market that's been a bull market in general on an equal weighted basis. But at the same time, we've got Modi hugging Putin and very complicated global dynamics happening. So how safe is it to invest in some of these markets and even in emerging markets with so much geopolitical strife?
Yeah, I think that India is a completely unique case on its own. As you know, it's the most expensive market in the world today. It's the one country, I would say, which is having a true bull market, even compared to the US, as you point out, that the breadth of the Indian bull market is what you typically see in bull markets, that everything is rising there, with mid to small caps doing better than even the large caps. But I will not say that geopolitics is a major risk for investing in emerging markets as such. In fact, if anything, I think we will look back in history at the time when the US imposed sanctions on Russia in an unprecedented way by weaponizing the dollar, that really is set in motion where countries are trying to find their own alliances, trying to reduce their dependence on the US dollar. And that's something which is continuing, and why the price of gold is doing so well with central banks around the world buying gold in record numbers. So I think that emerging markets at this stage outside of India, which is obviously very expensive, are extremely cheap. But this is the central issue which we are dealing with in the US, and I think we're dealing with global investing, that we can go on talking about markets being cheap. The central issue is mean reversion dead, or is it just dormant? I hope it's just dormant, because if mean reversion is truly dead, this is going to be a pretty boring market where just the same few stocks keep piling on and keep doing well in a way that's never happened before. And I think as some sort of mean reversion returns, some of these emerging markets are going to do well. And we're seeing some signs of that already come back, particularly as the dollar has stopped appreciating after the great run that it's had.
Okay. I'm going to ask you the same question I asked Afsana Beschloss from Rock Creek on our show yesterday, and that is we just talked about NATO, so Europe's in focus from a geopolitical standpoint today, but we did just come through the UK elections. We just came through this French election as well. It does seem like there's this theme out there of voters pushing against the establishment or the incumbents and looking for policy changes. Is Europe investable right now?
Yeah, I'd say that as far as Europe's concerned, it's a very differentiated picture. So I think that the French election tells you just how disappointing things are in Europe, where in France, the best outcome investors hope for is gridlock, because there's going to be change in France. It seems to be it's going to be for the worse, given the fact that it already has very high government spending as a share of GDP. And I think that it's so difficult to top it up when a government spending as a share of GDP is already so high. So I think that as far as Europe's concerned, there's a cyclical story in Europe, which is that after the very depressed year that it had last year. We're seeing some sort of a revival in consumer spending. But on a long-term basis, if I were to pick a geography, I still think it's emerging markets, because emerging markets have both value and growth. In terms of growth, meaning economic growth, Europe has value, but very little growth in the long term. So I think we have to distinguish these two things, that yes, this year in Europe, there's a cyclical pickup. So I think Europe does okay. But over the long term, emerging markets are a better geography because they're both value and growth. US has some growth, but obviously it's so expensive compared to all these other regions.